As of November 2024, the outlook for natural gas remains mixed amid high inventory levels and ongoing geopolitical tensions. Natural gas prices have been volatile, pressured by surplus US supplies and mild temperatures that reduced heating demand. However, winter seasonality may create upward pressure, as colder weather typically boosts prices due to higher heating demand. The Energy Information Administration projects slightly higher prices for 2024, but still under recent highs due to supply resilience. Leveraged ETFs like BOIL may see short-term gains if winter demand spikes, while KOLD could benefit from continued price softness if inventory levels remain robust. G'day folks, welcome back to another update for natural gas and its respective ETFs. We've hit our target area in terms of a bearish divergence, and I'll talk about that in a minute. But first, let's look at the trends on our monthly, weekly and daily charts. So on the monthly, we're still bullish with our CCI above its moving average, and likewise the price is broken above. On our weekly, that's also been bullish and remains so, with the price still heading higher. And on the daily, if I zoom in on this one, you'll notice here we've got higher highs on the price versus lower highs on the CCI. That's a bearish divergence on the daily. It hasn't actually pulled back yet, but it looks like it may well be starting to do that so far. So if it does pull back, we're going to draw a target area. From that high, we'll pull it back to this significant low, and that'll be our target area in the short term. Of course, it could go a lot lower than this, but that's our immediate target minimum, assuming the price keeps falling from there. Of course, the price can still bounce up and sort of threaten these resistance areas, but at the moment, the CCI looks like it's falling off as well, and it may well come back down and touch this target area. And of course, as I said, it could fall through that target area and come down towards the 50 or even a 61% target range. Now, if we go to the intraday chart, this is what it's already hit. So again, you'll see here we had a smaller range divergence, this little lower highs on the CCI versus higher highs on the price. We drew a target range there and it came and penetrated right through that. In fact, it is currently sitting around the 50% retracement level. If it drops below that 61%, then we're going to look at it falling even further possibly, so we'll keep an eye on that. And I've had another target area there as well, and that was from this previous bearish divergence, and that was hit originally. It bounced and then it developed this secondary divergence. Also, just for those new to the channel, what we do is we trade on the direction of the higher time frame. So if you're trading on the hourly, you're trading the direction of the daily. So you can see here the daily has been bullish, and if we were to draw enter trades on the hourly, let me just get rid of this Fibonacci, make it a bit clearer. So you can see there, that was from the 10th of November, which is from this point. So when it breaks above, when the daily is bullish, in this case it was, and when it breaks above the CCI, above the moving averages, but also above the price chart moving averages, you would have entered long on that candle, even though it was a gap up, and you would have ridden that trade. Now, in this case, you would have got out. A couple of ways to get out. A few points into that one. I prefer to get out when the CCI touches the moving average range on the CCI. In this case, it worked better if you got out on the price touching the moving average or the price chart. The problem with that is often they can have a big lag in terms of by the time it comes back to the price on the moving average, whereas the CCI gives you an early warning signal. And what you could have done as well is had you exited on that little candle there when the CCI touched the moving average range, then go long again on that candle, and you would have exited again when it touched the moving average range on that red candle. So again, it would have been two little trades there, and since then the price has been falling off. Another long trade there, and you would have got out on that red candle near the top there. And at the moment, you wouldn't be going long because the hourly is showing bearish momentum at the moment. So on BOIL, on the monthly, still bearish on the monthly chart, the price still falling below its moving average. There's no CCI for it. On the weekly, we've got a bullish divergence here, higher lows on the CCI versus lower lows on the price, and that's actually still falling. There's no real movement to the upside yet. I'd like to see it break through this moving average range and then break a lot higher than that previous high. On the daily, we did have this bullish divergence back here versus lower lows on the price. It bounced off this support, the support at 35.98, and we draw a little target range here. That was a little Fibonacci retracement at that 23.38% level. It hit that, and now it looks like it's pulling back down towards that support level. If we go to the intraday chart, again, remember we only go long if on the hourly if the daily is also bullish, and you would have taken some long trades during that period, similar to the natural gas price. And at the moment, you would not be going long or short because the daily is showing predominantly bullish momentum, even though the hourly is broken to the downside. For KOLD, on the monthly, it's broken above its moving average, so a bullish momentum at the moment. There's no CCI on the monthly. On the weekly, we had a bullish divergence here on the going back to 2022 versus lower lows on the price, and since then it's bounced and it's still rising. You can see there both the CCI and the prices above their respective moving averages. Therefore, we only take long trades on a daily. In this case, if you're trading on the daily, we only take long trades on the daily because of that weekly momentum. Now, on the daily as well, it actually hit this key resistance up here at 85.10. It's done that about 3 times already, a triple top, and it looks like it's going to actually break to the downside again. Bearish momentum at the moment, coming towards this minus support at 61.65. Going to the intraday charts on the hourly, again, based on the daily, we only go short. So you would have taken a short position back there, a couple of small trades there, and another entry there, and exit again. You might have had a couple of very close exits with minimal gains. At the moment, it's in a bullish momentum on the hourly, but avoid going long until we see this break above the moving average on the daily. Lastly, for UNG on the monthly, it's bearish on the price chart, but notice on the CCI we've got this very narrow moving average range, and the CCI is in that moving average range, so giving us a neutral signal. On the weekly, we've got a bullish divergence, and that's still bullish versus lower lows on the price. Again, nothing really dramatic in terms of a retrace to the upside, but notice it's still showing a bullish momentum. On the daily, again, it's actually hit that triple bottom off that support at 12.57 and is struggling to make further highs. It did break slightly to the upside, but notice it's pulling back towards these 2 key support areas. So if you go to the intraday chart, we only take long trades again, and you would have taken these long trades on this CCI. Now at the moment, it's a big, strong pullback to the downside, as I said, and the CCI is showing bearish momentum, so avoid going long or short until we see this stabilize. So if you go long only if the daily is going long at the moment, or if it breaks below that moving average range on the daily, then you can take short positions. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.